Welcome to Fix It Finance. So today we're going to be talking about the differences between a line of credit and a credit card. Now, a lot of people, have questions about this just because, they're not quite sure. They shall know both of them. It's shall money that's available to you. But okay, so let's get right into it. Before I go into the differences, I want to talk about the similarities first. So, the similarities between a line of credit and a credit card. Now, I'm going to be referring to line of credit as LOC and credit card as CC, just so you can follow. Okay, the very first similarity is the fact that both of them are loans, meaning you have to pay it back. It's not free money, contrary to popular belief. It's not free money. You have to pay it back. So always have that in the back of your mind when you're thinking of a line of credit and a credit card. You might say, of course, I know that that's obvious, but quite a lot of people don't accept this reality. It's not free money. You have to pay it back. Okay. Another similarity, both of them are pots of money that are available to you to take advantage of opportunities. That's the whole reason why credit cards and lines of credit exist. Well, not to the bank. The bank wants to make money. But for you, the only reason they exist or that they should exist is because you want to use them to take advantage of opportunities. Okay. The next similarity is the fact that both of them are interest bearing. This means it costs you to have these two products. So a line of credit and a credit card costs you money because you're going to pay interest on them. The next similarity is the fact that both are revolving lines of credit. Yes. So they're considered revolving lines of credit for credit monitoring purposes. And what this actually means is the fact that you can borrow the money, pay it back, and then borrow it again without having to reapply. Like a mortgage, for example, if you pay off a mortgage if you want more of that money, you have to reapply, unless it's a BMO mortgage, which in another video I'll talk about that. They have this really cool thing where if you prepay your mortgage, you can actually borrow funds, those same funds again if you need to, but that's for another video. Okay, the very next thing is both affect your credit score. So the 5 similarities include: 1, they are both loans, meaning you have to pay back. 2, there are pots of money available to you to take advantage of opportunities. 3, they are interest bearing, meaning it's going to cost you money to own these two products or to have these two products, if of course you don't manage them well. 4, they are both considered revolving credit, meaning you can borrow, pay back, and borrow the same funds again without having to reapply. And then 5, they both affect your credit score. Moving right on into the differences. A line of credit usually has a larger amount that you can borrow. So this means, they usually start around 5,000 and up. So if you want a line of credit, you can borrow larger amounts, 5, 10, 30, even 40, 50K, depending on, your income, your credit score, and a lot of other factors. Credit cards, on the other hand, tend to have smaller balances. Now, the maximum I usually see people get is around 20 to 25K, and you can get much smaller amounts, 500, 1,000, 2,000, especially if you're not yet comfortable with managing debt as, a resource. The very next thing is the fact that interest rates on line of credit are usually lower than on credit cards. So a line of credit, for example, would run you prime plus. So it's going to be prime interest rate plus a certain, percentage that the banks put on it. So on average, you're looking at 10% or less. Of course, if interest rates still keep going the way they are going, who knows? But with credit cards, they usually, the lowest I've ever seen is around 12%, and they go as high as 30%. I know they say it's 29.99, but that's 30% if you don't know. Okay. The next thing is the fact that on a line of credit, interest starts to charge from day one. Meaning if you take out money today, let's say you have a line of credit that has a $5,000 line available, you borrow $1,000 from it, interest starts charging from that day. A credit card, on the other hand, if you have a $5,000 credit card, for example, if you spend $1,000 on it, you have 21 days to pay that balance back. So it's interest free for the first 21 days. That's a huge factor depending on what you're using the money for. Okay, so make sure you keep that in the back of your mind. Line of credit starts charging you interest from day one. Credit card, you have a grace period of 21 days. Okay. The next thing is the fact that I'm going to talk about the minimum payment. So on a line of credit, the minimum payment is usually 2% of the balance or $50, whichever one is higher. And then on a line of credit, it's usually around 1% of the balance plus interest plus fees. That's usually what makes up your minimum payment. Now on a credit card, when you're making your minimum payment, you're at least up to date on interest. On a line of credit, that's not the case. If you make only the minimum payments, your interest might be added on. Like your interest, you may not pay off all the interest. So make sure you take that in mind. So, just in general, concerning these two resources or these two buckets or pools of money or available funds, whatever you want to call them, if you pay only the minimum payment on it, you may not be up to date on interest. So you want to be very careful with that. So as much as possible, make sure you are making extra payments on them, especially when you're in the payback mode. Like, if you're trying to catch up and increase your net worth and just, make sure you're not playing around with too much debt. Make sure you pay back more than the minimum payment in order to see any effect on the principal that you actually borrowed. Meaning, so for example, in both examples, I used 5,000, 5,000. If you spent all the 5,000 on the line of credit, don't just pay the minimum balance. Make sure you pay off, extra on it in order to start catching up on that 5,000. Anyways, I hope you learned something from this video. See you in the next one.